All right, coming into GDP numbers. And let's see what we've got. Okay, an initial push lower for gold and the euro. The pound also making a stab lower. NASDAQ taking a little bit of pressure here. I'm gonna say this perhaps suggests that we saw stronger than expected GDP numbers. There it is, 4.9%. Whew. Guys, that is a wild number. We also, however, had some other numbers come in. Durable goods came out hotter than expected. Core durable goods came out better than expected. Advanced GDP came out higher than expected. So again, GDP expectations really, really strong. Now, look at this. NASDAQ actually pushing up a little bit. Pound USD pushing up. A quick reversal, the initial spike in the direction of what we thought, right? Stronger than expected GDP numbers. Claims came out pretty much as expected. We're going through the numbers here together, guys, trying to make point of this. So let me do my very best to understand. Okay, Pound USD is coming up into this area. I'm just a heads up. I'm watching this for a possible trade. However, I'd like to see this price action kind of normalize. And I'm trying to understand this number. Again, to me, that's a strong GDP number, 4.9% compared to forecast. That's going to stay dollar bullish in my view. And I think I might actually be taking a trade here. I like this setup.
Did you know that you can watch Trader Nick live stream every morning, Monday through Friday, with guests from all around the world? Each morning, right here on the A1 Trading YouTube channel, we put on a live show where Trader Nick, along with some very special guests, go over their charts and ideas for every kind of asset. We do a live reaction to news drops and do analysis immediately following. You never know what's going to happen during one of our streams. So come be a part of the live stream community. You can find our live streaming schedule on the A1 Trading Twitter account each week so you never miss a news event.
Yeah, Pound USD, I do share the same bias as you. I'm still looking at price coming into the lows there as well. Yeah, for me personally, I like taking big breakouts. So I like price like clearing level like by a big amount. I try and avoid the shadow breakouts. They do work as well, but I just had more success with the bigger breakouts personally. But yeah, Pound USD, I am bearish. I'm still looking at price coming into these lows. I did miss an opportunity last week to short Pound USD. It didn't quite come into my area of interest, but price was tapping into this trend line, also into this price swing low on the left as well. I was hoping price can come a little bit higher, but it just missed it. Since then, we've had a very strong reaction in the daily chart, and most likely we will probably go and take out the lows. We have probably about 70-75% chance of the market coming to take out the lows and continue its trend. So in terms of my analysis, I'm still looking at more downside. For me, myself, I'm not really seeing much in terms of an opportunity that fits my plan for me to jump into pound, but I am bearish on the pair. Other dollar pairs, I do like Aussie dollar. I did take a loss on this one earlier this week. I got into an entry on this candle here. My stop loss was above the high. I had some Aussie news on Tuesday or Wednesday morning. Can't remember, but we had some Aussie news. It stopped me out, and then of course price once it took me stop loss, it decided it wanted to fall after that. I did have some shorts as well last week from here, but it eventually took me out for a small win. So I got back in, took a loss there, but I do still see more downside for Aussie dollar. If we can break these lows, that would be fantastic. And then I'm looking at price coming all the way back down to around the 0.62 region into this low here as well. So I like Aussie dollar shorts, and I also like dollar CAD longs if that one can pull back into some structure here. We've got some nice confluence around these parts, so it would be nice for a pullback. Still looking for dollar CAD to come back into the highs up there. So yeah, I'm still dollar bull, but Aussie dollar USD CAD is my main pairs of focus.
Sure. Yeah, no, good points there. I think at the end of the day, what one person sees on the chart or in terms of their strategy might not marry up exactly with what other people see. I think one thing that's really important for viewers listening, especially if you're newer to this stuff, just because someone is so Mika, you just mentioned you're still dollar bullish. There's a difference between, I think, being bullish or being bearish something and actually taking an entry, right? So for example, I've been transparently in pain with my NASDAQ ideas because I think it was 3 trades in a row that I tried to catch a bullish continuation on this move. And I don't hate the price action that I entered on. There was a nice trade attempt that I had here that rolled over on me. There's another one that I took at this level and then I tried again. And so it was one of those things. I'm still more fundamentally bullish on the NASDAQ. I think that there is upside for stocks coming, but the technicals just didn't agree with me. And so sometimes it's simply, you might be bullish or bearish on something, but the indicators that you use, whether it be price action, RSI, trend, moving averages, Bollinger Bands, whatever you use technically to enter and exit the market, might not quite agree with you right away. So just want to make that point. Marco, in terms of the recent rally that we've seen in gold, I know that a lot of people in the audience are very curious about it. Gold, I mentioned it's had this crazy run up. And unfortunately, for one of the main catalysts behind this, it's been the war in the Middle East. It's been, concerns around escalation in that area. All of these things driving the price of gold higher recently. But I'd love to get your thoughts. Are we getting close to a reversal for gold? I know a lot of people are thinking, this gold move is just going to keep going. Other people are bent out of shape that it's got to reverse here. I'm really just neutral. I've stayed pretty neutral. My idea that I made earlier was if we get a break into the 2000s, it might change my mind a little bit, but I'd love to get your thought on gold. And then I'm going to ask the same thing to Miko, because again, lots of people curious about it today.
Sure, let's do it. So gold, I'm going to do the 1 hour chart. Okay, so it's getting exhaustive, but you never know with these moves. I need to get the confirmation, to be honest. What would be the confirmation? Well, the confirmation would be a nice, red downtrend with large red candles. So it's never good to call a bottom or a top if there is even no confirmation of any selling pressure. Let's say if you're calling a top and you're seeing this, this cannot go up anymore, it's hitting the 2000 level or it's gonna hit it, and you can see the legs are getting more corrective as we go up. Now we're kind of ranging around as well, but this can also be just consolidation but before we push back up. So I'm completely neutral on this one. What I would need to see what would confirm a reversal would be, as I said, that confirmation, and would be a really large downtrend. Then I would be happy to look for sells, but right now no one knows. I cannot even tip the probabilities up or down, basically.
Yeah, it's a really tough call at these levels, because again, I really one of the things that I kind of am careful with fundamental analysis is geopolitics, because they're so hard to predict, right? Because nobody knows. None of us know what's going to happen next with the United Nations or with Israel or with Gaza. We don't know what's going to happen there, and yet it's going to drive all the prices around everywhere. So it's that is a really tricky area. So I kind of default back to what I really lean into, which is more on the economic figures, numbers, and I try and stray away from the unknowns as much as I possibly can. But anyways, same question to Miko. What do you think about this gold move? Is it getting exhausted? And just I appreciated the way Marco broke that down in terms of what he would need to see if he was to derive a bias. So even if you're neutral, what would get you there on a bullish or bearish idea?
Yeah. So gold is interesting. I was talking about gold coming into the weekend. My main focus was this big level here at 1980, if I'm not mistaken. So yeah, gold keeps dancing around this area here. You can see with current day's price action, it's a daily chart, by the way. Current day's price action, we've had a big wick to the upside so far. We obviously got 8 hours roughly before that candle does close. So a lot can happen in that time. But effectively, what I'm looking for is to see if we can have a big break of this, because what I'm looking at is potentially a reversal for gold. And if it is a reversal, most likely we're coming back to the highs here around 2050, 2060. So if I do see price clear this, I think that the momentum we've seen over the past couple of weeks, 3 weeks or so, will most likely continue. And then I'll just be looking at pullbacks, break and retest, just looking to find my patterns to continue price back into the high. So I'm not looking at shorts. I know price is rejecting the level quite well at the moment. Nice wicks. Of course, this candle still got a few hours before it does close, but I just don't want to short against this momentum here. It's just far too aggressive in my opinion, at least for my style anyway. It's just way too aggressive for myself. So I would never look to short a move like that. I would either look for price to break away to the upside or potentially come back down. There's a nice high here on the left that I would possibly look to long from, depending how we react from. But well and truly, I want to see price break out and then follow it up. So yeah.
I also want to just take a quick look over at the euro. Right now, I know that we do have the ECB press conference occurring at 8:45 a.m., which was, of course, about 10, 11 minutes ago started. So I would just want to alert everybody who is watching euro pairs. It is very likely that you get some volatility here on the intraday candles. Again, a little bit of spike on the euro. We'll have to check in and see what was exactly said. But expectations for the euro, I'd love to kind of loop back one way around the room again with you guys. Euro pairs, what are your thoughts? Maybe euro across the board, whatever you'd like to do. Again, we'll go Marco and Miko, same questions. So Marco, any euro pairs or thoughts on euro for people who may be watching them today?
Yeah, sure. So for me, there was a nice downtrend right here. But again, the legs were getting smaller. We're just breaking and retracing, and now this mess on the bottom. So what I do expect in the short term is either like a flat range here or a complete reversal to the upside. Something like this. What I'm looking for is possible reversal, and then I will look to buy on the euro and US dollar. So I'm expecting upside for this pair, EJ, euro, Japanese yen, news candle. So it's very important what happens in the next few hours. Right now, it's not looking good. It's starting to range around. Usually, in most cases, when I see a news candle and we start ranging around of it, inside of it, then usually range continues for a really, really long time. So this one I'm just completely leaving alone. What I want to see price pick a direction up or pick a direction down, and then I would be looking to buy or sell. And I do have a question. You have mentioned that there is, of course, a war going on, which is pretty recent. So what's your plan and what's Miko's plan? Do you go close on Friday or do you not trade certain pairs? Like how do you implement that into your trading, some of these outside conditions?
I'll answer that quickly and then I'll pass it over to Miko for both that and the euro. I think war adds overnight risk for sure, because just because the markets are closed doesn't mean war stops, right? Unfortunately. I wish it was that way. You know, it's like that story, the Christmas Day kind of celebration in World War II where they all stopped and played soccer together, which, you know, I don't know. But anyways, when it comes to markets, Saturdays, Sundays, sure, the markets are closed, but things can continue. So the overnight risk, I do think, is elevated. However, I think one contrarian view to that is that if you are fundamentally bullish or bearish something and you know everybody's going to be getting out, they might be giving up their seats, if you will, to some great trades. So like they might, for example, they might sell off their stocks. You might actually be able to pick up stocks at a cheap rate, carry that overnight risk, yes, but benefit in some ways. I'm going to bring that same question to Miko. Let me just interject for 1 second for those of you guys who are watching or listening in on the ECB stuff that's happening right now. So Lagarde basically has reiterated that the economy remains weak. Manufacturing is continue to fall, subdued demand, tighter financing, damp consumption, economy likely to remain weak for the rest of the year. This is not unexpected, right? The European region has seen some slowdown, and I've kind of voiced my opinion on dollar preference for that very reason. So in my opinion, pops on the euro are more bearish than anything. So go back to Miko in terms of euro pairs, as well as Marco's thoughts on holding trades over the weekend. Take either one first. What do you think?
Yeah, so firstly, the news, I'm pretty much just trading how I've always done. Again, in terms of like Russia-Ukraine, which was last year, I didn't really change much of my trading. The markets were definitely more volatile. I remember Euro USD and Pound USD were affected quite a lot. There's big moves there. Gold, we're seeing big moves across the FX pairs. There hasn't been too much in terms of anything crazy, but in terms of my risk management, I normally have max positions on at one time is 2, and that's very rare that I actually have 2 positions at once anyway. So in terms of my exposure to my account, this is quite minimal. And yeah, of course, there's that risk that potentially price might gap and stuff. But I think that's just a price I have to pay just as a trader in general, like that can happen at any point. So yeah, my take on it is just from a trading standpoint, is just kind of trade as normal. Maybe be a bit careful, but I'm not such an aggressive trader. I swing, I hold. I don't really trade too many instruments at one point, so my exposure is not that elevated. So yeah, I just trade as normal pretty much.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free EDGEFINDER, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.